Hey guys, this is Trade Hunter from Steady Trades here. I want to talk to you about when to use the SMA versus the EMA. So we know that the SMA calculates the average price of data, while the EMA gives more weight to the current data. This means that the SMA is more suitable for long-term trends and the EMA is more suitable for short-term trends. So let's show you an example. Here we have the SMA 200 on the daily time frame. What I want you to pay attention to is the beginning of April in 2022, when we confirmed a longer-term bearish trend that we have held since then. We would have entered the bearish trade here, and it would have been confirmed at closer to the end of April. With the EMA, we did not break below that price point until the end of April. We could have gotten easier entry on the SMA or confirmed that bearish longer-term trend. Now, when it comes to shorter-term trades, we have the EMA on the 9-period time frame here on the 1-minute chart. Here we see that it's riding the 9 all the way up all day, but I want you to pay attention to here. On the 9, EMA on this price action did not fully close below the EMA, indicating that it was continuing its upward trend that it had held all day. If we look at the SMA, the candle did close below it, indicating the more longer-term bearish trend that we've had going on. So the EMA was more reactive to the data of this day. So thank you.